Let's welcome in our experts as well on the show. We've got Shilpa, Rout, Kunal, Bothra, Chakri Lokpriya joining in. Kunal, if I could start off with you and let's pick up the trend on PSBs first. Does it seem like this is a durable move? Could it last? Is there a trading opportunity here?
I think we have to be very selective over here, but there are two, three names from the PSU banking stocks which still looks attractive. I think Bank of Baroda is something which we flagged off even in the morning as well as over the last couple of days. Canara Bank is something which has given a breakout about the 365 mark, and SBI. So I would not go for a blanket buy into the PSU banking names. We've seen a very good rally for PSU banking stocks, especially the tier 2 or the mid-cap names and the two-digit stocks. But then I think now it could be a good time to try and move on to the larger cap names. I would still stick to the likes of Bank of Baroda as well as Canara Bank and SBI at current levels. Yes, the rally for these stocks is quite strong, but I think when the market gets into a zone of a bit of risk off, it always makes sense to have more tilt towards the larger cap names, even within the sector like PSU banking.
Okay, so that was about the PSU banking space, but Naresh, it's autos as well, which are doing quite well for themselves. Would you call this move on Maruti a bit of a breakout? Kunal, first you go.
So yes, Maruti I think is a clear case of a breakout, and I think after yesterday's move when the stock managed to hold on to that 10,200 mark, that was a very interesting point of support for Maruti, because that also led the indicators into an oversold territory on the hourly charts. So today's bounce back is not just a relief from the oversold nature of indicators, but it also reinstates the fact that there's a trend in the making for Maruti. Now on the higher side, I would believe that the stock should be up for at least 11,000 kind of a breakout over maybe the next couple of weeks. So would probably expect at least another 500, 450 points upside for Maruti from current levels.
Okay, so that was about Maruti. Shilpa, your view on the market and which pockets do you find the maximum strength in?
Good afternoon, everyone. Market view stays, negative on the side, because we see that 19,800 is acting as a crucial resistance until and unless we move 18,800 mark. I will see a very aggressive buying coming. We might consolidate and find support at 19,400 from here. So maybe another 200 points of dip from here is a good scope where you can enter for fresh long.
That's a take coming in. Thanks, Shilpa, for that. Chakri as well with us on the show. Chakri, this week has been fairly volatile. Last 3 trading sessions, we have been on the negative footing. Do you think this is a bit of a reversal and we'll go towards probably 19,300, 400 levels? Or do you think, okay, even if we go to 19,300, 400, the long-term or even the medium-term story is still very, very much intact?
Well, indeed, we've had a very good run over the last couple of months, 2 to 3 months. There has been a little bit of profit taking. In spite of that, I think there are more than enough number of opportunities out there, stocks which are still very attractively priced. So that's the way we view it. I think so many of our long-term positions still are intact, and even banking names or even the PSU names, non-banking PSU names, are still, various pockets are still looking attractive, and therefore, and the overall market itself is clearly still, earnings are catching up. Multiples are only at about 18 times. So which means there's sufficient room to run.
Okay, let's talk about what's not looking good today, and that's definitely been pharmaceuticals, right? I mean, everything from a Glenmark to a DRL, these are the pockets which are weighing heavy on the markets right now. I can see even an Alchem, there's a Zydus as well, which is a rank underperformer too in today's trading session. So let's just bring up some of these stocks and show you where they're currently at. Of course, this comes in light with the Glenmark Nirma deal as well, wherein Glenmark is going to become debt-free. Brokerages have come out with their notes on Glenmark. I'm not quite sure whether this deal has any bearing on the way pharmaceutical stocks are panning out today. But Kunal, why this sudden pressure? I mean, one would have expected, if at all, a fall in the large cap names, and not pharma per se, which was sort of trying to get out of the woods.
I think maybe, it's just like what, the price action was for ITC. Post the news flow, everyone expected that demerger news for the stock, and post that from 495 levels for ITC, we've just seen the stock going into a corrective mode. It started off with a correction on heavy volume. So my expectation is that possibly this could be a very similar kind of a price action for Glenmark Pharma. But the concern for the stock today is the heavy volumes which the stock has shown today in terms of selling pressure. So today's volume, I think, is one of the highest volumes the stock has shown in the last 4 or 5 months. And in the last 4 or 5 months, the stock has rallied from 400, 450 levels to 800 plus where the stock was trading yesterday. So that generally indicates that this could not just be a short-lived reversal, but it could be a sharper drop for Glenmark Pharma even going forward. So which means that near-term trends for the stock could be on the downward side or at least sluggish, but definitely not look to be bullish on the stock at least over the near term.
Okay, not being bullish on Glenmark at least for the near term. But Chakri, your take regarding the PSU banking names, do you still see value in some of the names or do you think they've run up quite a bit already?
You know, they've all run up, but there's still a lot more to run. If you look at, in fact, today, many of the banks, including State Bank of India, they've all done some infrastructure bond financing. They were all done at good rates, and you know that places them very well. And also now with the JP Morgan index inclusion, it kind of not only brings down the yields, but also brings the much needed liquidity for the Indian bond market, which is traditionally did not have the kind of liquidity. So all these things are clearly the business catalysts, which will help in further re-rating of the valuation. So Bank of India, Canara Bank, SBI, they all look there's still more steam left.
Right. Okay, that's that on PSBs, but let's just get back to the route that's currently playing out within the pharma pack. Remember, Glenmark Pharma is looking to divest 75% stake in Glenmark Life Sciences to Nirma now. This is the deal that you heard about first right here on ET Now. But today morning, we were chatting with the House of Bernstein as well. And here's a word coming in from Nitya Balakrishnan as to where she finds value within the pharma pack at this level.
Cipla is a relatively well-run company, so we didn't really see any immediate quick wins that they could go after to unlock value. That's probably why Blackstone is maybe backtracking. Torrent, I think the strategic rationale is clear. I think we actually did this analysis of looking at their India portfolios together. And while there is overlap in terms of molecules, what we found was that it's largely manageable in the sense that even in the overlapping molecules, one of them have like significantly high market shares. So then, therefore, it might be easy to either sell the smaller brand or retire the smaller brand. We had called out that it won't be an easy task for Torrent to find the monies that would be required to close this deal. In this specific case, the promoters of Cipla obviously want all cash. Not an easy one for Torrent, which is a smaller company. We have now, in the press, we have now heard of a mix of Apollo, JP Morgan, CVC, Bain Capital, all of them seem to be involved in some capacities. So maybe they're successful, but it's going to be a tough one in terms of how they raise the monies. If the Blackstone deal or the Torrent deal is going forward, I would imagine it's a positive for the Cipla stock. But if either suitor and both the suitors actually fall out of the race, I would imagine the stock will actually react negatively.
Okay, so that was about the pharma space. It's of course under the weather today, but there could be one of the Philips at least that could be there for some of these pharma majors, and that's the PLI scheme that might be extended for some of the drugs. Let's go across to my colleague Prakash to get the exact details on this one. Prakash?
Yes, a big development coming in for the pharma sector. Sources are informing that the government may provide financial incentives for manufacturing of some new drugs under bulk drug PLI scheme, which means ambit of PLI for manufacturing of bulk drug could be enhanced going forward. We are given to understand that the empowered group of secretaries has asked a committee led by CEO Niti Aayog to consider this proposal. After due examination, the committee will take a final call on inclusion of some new drugs under existing PLI scheme. Apart from that, sources are also saying that financial incentives will be given from overall outlay of rupees 6,940 crore, which is earmarked for bulk drug manufacturing. In addition to that, sources are also informing that the government is planning to extend the time period for disbursal of financial incentives under this scheme, which means this benefit will be given for both these schemes. The first one is for manufacturing of bulk drugs, and another one is manufacturing of medical devices. So we are given to understand that the time period for disbursal of financial incentives could be extended beyond a 6-year period. That will encourage companies to take interest under existing scheme. As you are aware that the government has announced 3 comprehensive PLI schemes for the pharma sector in order to boost domestic manufacturing. Rupees 6,940 crore has been earmarked as in financial incentives for manufacturing of bulk drugs. Around rupees 3,000 crore has been announced for manufacturing of medical devices, and rupees 15,000 crore has been earmarked for manufacturing of pharmaceuticals. So it's a big development coming in, and after committee's recommendation, that will be weighted by empowered group of secretaries first, and then cabinet will be approached for its final approval.
Right, Prakash. We'll leave it at that. Thanks so much for joining in. Let's just quickly take stock of what else has been holding out in the market. Of course, it's the PSBs led by Canara Bank, BOB. They're all the ones holding out. There's, of course, Berger Paints too, which is seeing quite the spike up. About a 6% move up is what that stock has been seeing. And then, of course, there's REC as well, which is up about almost 4.5% as we speak. Within the PSU pack, Coal India is continuing to top the charts, still holding up about 1.5% in trade right now. Shilpa, just want to get in on the charts of Coal India because this has been pretty, actively traded off lane and on the upside.
Actually, Coal India is on a very strong, I would say a bullish trajectory where you will see targets of 320 to 330 within no time with a stop loss of 260. It has made a very strong base around 260, 265 zones. So I don't see that breaking anytime soon. And from here, the upside move towards 330 is going to happen. And above that also, if it sustains, you will see 340, 348, 350 zones coming in.
About Coal India, yes, it's been on an uptrend and a bit of a breakout is what we have been witnessing on that counter. But Chakri, what's the view on Maruti? Today, Citi is quite positive. They've raised the target price to 13,600 now. At one point of time, we were waiting for that stock to hit 10,000, but from there, it seems like now the street is watching on for much higher levels. Not a completely new story, but they are talking about how the mix is improving towards sedans and a higher proportion of the, higher end value cars. But your view, do you really think 13,600 can happen sooner rather than later?
Maruti as a stock has been, kind of trading below its normal multiple for quite some time now. So it's given that, they're going to launch these SUVs, which are slightly more margin accretive than the entry-level cars where they have the big market share. So as that happens, you will see the multiple going back up to the 24, 25 times, which the stock usually trades at. And, with their move towards SUVs, they're nearly 55, 60% market share in the entry-level vehicles will help them. I think the stock does well from that perspective because now there are catalysts.
Okay, hold that thought. In fact, let's do one thing. Let's take a breather on the show. But when we come back, we'll discuss more stocks with the guests on the show.
Back with closing trades right here in ET now. Let's just revisit where the closing trades are headed. While we are defending that 19,700 print, but again, it's not like we've not breached that level. In fact, I think I spoke too soon because again, we're sub that mark. 19,688 is where we're currently at. Kunal, 20,000 of course got taken away a while back, but now what's the sanctity of levels like 19,700 also getting breached?
The next support for the index is 19,300, and I think that's a more credible support. So generally what happens is after the first 3 or 4 days of sharp correction, the market stabilizes for a couple of days, and then if the news flow deteriorates further, then we look at a second corrective phase for the market. So I think in that corrective phase, I would probably anticipate 90,300 to be retested. Now the point of concern for many of the stocks is most of the stocks, like for example ICICI Bank, Reliance Industries, HDFC Bank, etc., many large cap names which were showing signs of recovery, they've managed to come back to a point where the index was sub that 90,300 levels. So which means that there is a higher probability which is getting attached that this time around the Nifty can also try and retest those levels. So the point of concern is the large cap stocks showing signs of weakness and no offsetting sectors. I think other than Nifty IT index, there are hardly any few stocks on the larger cap front which are actually being a lot more resilient. I think that's the point of concern for the markets. And that's why we believe that maybe the next couple of days, even if the indices stabilize, I think it could be a good time to actually create fresh shorts maybe on every intraday rallies.
We're just talking about Coal India, but Chakri, it's not just that. The entire power space has been quite heated, and I specifically want to talk to you about JSW Energy. That stock is higher by 7% today on account of the inclusion that we have seen in the Greed and Fear portfolio as well. GQG had also checked into the counter, but it's run up quite a bit already. Would you be a buyer at all in JSW Energy?
JSW Energy, yes, coming out of restructuring now with a host of number of projects, both in the thermal and non-thermal space, and their debt reduction plans. Stock has done very well, but valuations are still okay given the outlook of the number of megawatts that will be added. So yes, JSW Energy looks good even at current prices.
So that's about JSW Energy, but what about Berger Paints? Today there's a split that happened, and after that volume suddenly picked up, and you are seeing a 7% gain there as well. But paint sector, the fundamentals are not very positive, whether it's the crude prices or the increased competition. What would you say regarding the paints segment as a whole and the companies you like there?
Indeed, you hit all the right points in terms of there is lots of competition and big competition. Pricing has come off, will stay off. Margins for this industry are moving structurally down. So pricing power is moving structurally down. And plus, of course, in the temporary cycles of oil up and down, raw prices up and down will kind of hurt or help. But the multiples that you gave to a Berger and the other companies, Asian Paints, etc., I think will further come off. So I would continue to stay away from paints.
Point taken. So fundamentally, the pricing is shifting away from the paint companies, but one of the levers for them could be the festive season, and in fact, lever for a lot of corporates and a lever for the entire markets as well. At least that was the commentary coming in from Ashish Gupta of Axis Mutual Fund.
I think if we look today, I think whatever opinion polls that we are seeing, it does not seem that election results will provide a huge surprise. We feel that there is a significant degree of consistency that has kept into many of the policy making space. A lot of things have been made structural. So, for example, simple things like the vision in fuel prices, right? So some of these decisions have become structural, have got ingrained in the policies itself. Frankly, to my mind, that is not something we are worrying about.
Okay, that's the take coming in on the markets. Let's just look at what the Nifty Bank is doing, because like Kunal just flagged off, we've already dipped down in the red. So pretty much erased all of our gains there as well. Not just that the Nifty is at the session lows pretty much at 19,676. The Nifty Bank has also completely petered down now and is once again flat. While yes, you've got an SBI, Canara Bank, BOB still latching on to their gains, but the private banking names are the ones which are not quite participating. So HDFC Bank is still down about 1.25%. ICICI Bank still down about 1%. And Kunal, clearly, the weak trend that we were talking about, some of these heavyweight, large private banking names, that clearly persists. ICICI Bank, HDFC Bank, the two culprits for the fall last 2 days, they're still in the red.
Yeah, they're still in the red, and in the last rally, even HDFC Bank, ICICI Bank, they underperformed. But then you had offsetting rallies in the stocks like L&T that managed to do exceptionally well. I think it came back to 3,000 levels. Then you had rallies from the likes of NTPC, Coal India, etc. So many of the stocks, they went into a strong upward move. M&M did exceptionally well. So that was another stock from the auto pack which did pretty well. But then this time around, you don't have too many large cap names to offset the losses in the other large cap sets, the likes of HDFC Bank, etc. And I think that's the point of concern which I was highlighting earlier. Now, this again brings in the point that we could probably be getting into a phase of a further profit booking as well as a further reduction of risk from portfolios. And after such a kind of a strong rally in the mid caps, we've just seen a marginal correction to the mid cap index and small cap index. So that should also probably try and go into the second leg of downtrend. So net, I would probably believe that 90,300 could be retested in the next week or so.
Okay, 19,300. That's what Kunal has been talking about, and almost a 700-800 point lower from the current level when it comes to the Bank Nifty, because that too has moved into the red as we speak, and so does the rest of the market as well. But Chakri, before I let you go, last word on IndusInd Bank. There was a UBS note this morning talking about the quality of earnings improving. The stock has actually managed to outperform its peers. I mean, the likes of Axis, ICICI, etc. But IDFC First, that's been the stark outperformer and the leader with a 58% gain this year. Between IDFC First Bank and IndusInd Bank, if you had to choose, which would be your favorite?
IndusInd Bank is probably an easier name simply because, their problems are lesser to fix. And all the company needs to do now is, yes, they're moving towards more retail loans, changing their deposit mix, and all that is to basically help its margin profile improve. Now, if that happens, along with that, it's for the stock to re-rate further from here on. I think the credit costs need to come off. And if you're somewhere close to a peak of interest rate cycle, that also might aid. So I think it's IndusInd Bank.
We let you go on that note. Thanks as always for joining in. Kunal, let's have your closing ideas.
So I think from the closing trade, Ultratech Cement is something which I would go for a contra buy. The stock has been beaten down in the last 5 days from 87.50 to 8,200 where it's trading. So it looks to be oversold indicators, and would expect a decent bounce from current levels.
Okay, on that note, let's take a very quick break. It's getting a little brittle out there. We're at the session lows for both the Nifty as well as the Nifty Bank. We'll track the last half an hour of trade this week on the other side.